Max, why do you think the Bitcoin versus gold debate is so polarizing?
It's polarizing. I know from my own personal experience when we kind of switched from following gold in 2021 to starting to cover Bitcoin, it was like Bob Dylan suddenly going electric, right? The traditionalists in the crowd and those folks who are into gold thought it was an outrage and a betrayal. And so there's a lot of that in this debate. People have a huge affinity for gold. It's certainly got a long track record. Frank Giustra does a good job in talking about the track record of gold, that he says it's universality, which is very appealing. It's accepted all over the world. And I think he wants to enter this debate almost, as he says, I'm willing to switch camps. I'm willing to go long Bitcoin, convince me. Tell me why I should go long Bitcoin. So he's really waving the red flag to the ultimate Bitcoin bull, Michael Saylor.
I know I said at the start, we think Max Keiser, we think Bitcoin, okay? But I know from past conversations, and people might not know this, you have also embraced gold and silver.
Yeah, Michael Saylor, by the way, calls me the high priest of Bitcoin. So you can take that for what it's worth.
Yes, you are the high priest of Bitcoin. I want to get from you some insider, right? So if you were Michael Saylor, right, what points would you be honing in on? What's the greatest attack on gold? And then I'll ask you the flip side.
Well, I think with gold, the greatest attack, as Saylor would point out time and time again, is that it's not technology. And we live in a century that's now being completely dominated by technology. And what made Bitcoin great was all of the technology that we've seen for decades developing in the United States finally caught up to money. So money was the last industry, the last entity in the economy that hadn't been completely transformed by software, by technology. It has impacted every other industry in the world. Most companies, and at the end of the day, are software companies. We see this in the auto industry where they can't deliver cars now because they're out of microchips, right? So that's software, that's computer technology. It finally caught up to money itself in 2009 with Bitcoin, and now it's simply taken off from there. Frank, I know, has said that, well, Bitcoin's only 12 years old and we don't have enough of a track record, but that's a bit of a misnomer because Bitcoin builds on 25 years of technology development in the space. The so-called cypherpunks have been working on this for 25 years. Even Henry Ford, speaking of the car industry, talked about having an electric money as electricity as money. And he made those comments, 100 years ago. So this is not really as new as some think it is. It's the culmination of many decades of work. And then it finally took off in 2009. And like any network technology, it has the potential to go exponential. And that's we're at now, that hockey stick moment where ubiquity kicks in. So I think that Michael Saylor will drive home the point that this is technology and how technology is the centerpiece of the global economy and how technology is now transforming money itself and does a better job than gold in areas like portability, in sending money or sending value on the internet. Obviously, Bitcoin would be better than gold for that purpose. The transaction costs actually in Bitcoin are incredibly cheaper than gold in moving size. If you move $1 billion worth of gold, it's going to cost you at a minimum $30,000, $40,000 to make a move like that from one bank to another. We've seen $1 billion moves in Bitcoin routinely now costing $5. So that's an incredible cost advantage. So the technology aspect to it, I think, is really going to be a tough nut for Frank to overcome because it's such an obvious transformative reality that I think that's going to be a tough nut to crack, as I've said.
What would be the greatest punch in favor of Frank against Bitcoin?
The greatest outcome for Frank in this debate is going to be a draw. I don't think he has any hope of winning this debate. I think his greatest hope, like Rocky in the original movie, he's going to be fighting to a draw. And that will be seen as a victory to the gold crowd, that we didn't get beaten, but we still remained with our faith in gold intact to some degree. I think the one of the outcomes that we'll see is an on-air conversion of Frank to a Bitcoiner in real time. I think he's really hankering to become a Bitcoiner. He's currently a no-coiner. He keeps saying he wants to own it. He wants to buy it. I think to get a high-profile guy like Michael Saylor to sell him on Bitcoin in real time gives him entree into the Bitcoin community in a very splashy way. He immediately becomes very well known as the guy that Michael Saylor converted as a money manager, and a guy who's very successful. As he keeps pointing out, he cannot ignore the price. He cannot ignore the action. He's underperforming against Bitcoin spectacularly now on the 3, 4, 5 year time span, and that can't go on for very long. And you can still able to claim that you are a superior money manager.
Yes, Bitcoin, beats gold, but the issue of volatility and also the issue of regulation will come up.
Yeah, those are two issues that will definitely come up: volatility and regulation. On the volatility issue, when you have an asset that's emerging to compete with gold and it's compounding at 200% a year for more than 10 years, that's the volatility. I'll take that volatility every single day. You can't have an asset move up in the millions of percentage points without volatility. And also with Bitcoin, remember something, this is very important. I'll speak as a Bitcoiner. With fiat money, which we also have to include in this debate to some degree, with fiat money, you've got no volatility, but you're guaranteed to lose purchasing power. That's a guarantee. With Bitcoin, you have some volatility, but you're guaranteed to increase your purchasing power. So what would you rather have? Some volatility and increased purchasing power, or no volatility and a guaranteed loss of purchasing power?
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
With gold, as Paul Tudor Jones has said, he owns gold, he owns Bitcoin, but he considers Bitcoin to be the fastest horse in the race because it's competing with gold as a store of value. One of the things that Frank has said recently that I would think is a little off the mark, he says there's not really any institutional adoption, but that's not true. We're seeing institutions all over the world: insurance companies, endowments, hedge funds, sovereign wealth funds, everything up to the level of the central banks have been nibbling or outright buying Bitcoin. So we do have institutional adoption. We've got Fidelity, BlackRock, the hugest money managers in the world now buying Bitcoin or about to offer Bitcoin ETFs. So this is the institutional adoption is coming, and it is a global asset like gold. It is available universally, and it's being picked up in those countries that are being victimized by the U.S. dollar and the sanctions that come with the U.S. dollar. Those and the hyperinflation that we see in a lot of these countries, they are just rushing into Bitcoin. And it's a lifesaver. So on that front, I think he's a little behind the curve. There is a lot of institutions. On the regulatory front, we're getting comments out of Washington all the time where there's a flip. They're saying, actually, we're less concerned about regulating and we're more concerned about being left behind as these other countries start buying Bitcoin and mining Bitcoin. So America is about to enter a moment like the Sputnik moment where we entered the space race. America's got to enter the Bitcoin race, because these other countries that are hoarding Bitcoin and mining Bitcoin are set to have the hardest currency in the world as their reserve currency, and America could be left behind, number one. Number two, it's one thing to pass regulations, but it's quite something different to enforce the regulation. What we've seen in countries that have already tried to pass regulations or have passed anti-Bitcoin regulations is that they have found it impossible to enforce the regulations. And that makes sense because it's encrypted. There's no way to crack the encryption. It's completely distributed. It's repeated on thousands of nodes globally. And there's nothing you can do to regulate Bitcoin.
Are you hearing that out of China?
China hasn't stopped Bitcoin at all. Or India, they've banned Bitcoin many times, but usage goes up. Typically in a country that bans Bitcoin, the usage goes up. And so it's not really, we have not seen any ability of any regulatory authority to stop Bitcoin. They've only been able to highlight the need for Bitcoin and show that adoption rates are going up. You also have the issue of geopolitical geographic arbitrage, where if one country is going to try to clamp down on Bitcoin in a harsh way, then the industry moves to another country that then they're in a position to have a dominant position in a Bitcoin world. Particularly now the Coinbase is going public. That's $100 to $150 billion entity that'll be an IPO. It's going to create a lot of new insta-billionaires. They've got huge lobbying in Washington. The forces of the Bitcoin folks. Peter Thiel's comments recently about regulatory environment and Bitcoin. He seemed to suggest that there would be heightened Bitcoin. He mentioned China as being, to your point. But if you read the entire text, what you find is that what Peter Thiel is signaling to the American government is that they need to get in the game here, or they're going to cede the Bitcoin's high ground to China, which might happen if the U.S. continues to twiddle its thumbs and doesn't get into the Bitcoin race, as they should, just like they did in the space race.
I was wondering, does there come a point where you miss the boat on Bitcoin, like a price where it's just moved, and it's too late for other investors? How important is it to get on board now?
It's important to stack sats, as they say, accumulate Satoshis. Satoshi is 1/100 millionth of a Bitcoin. And you can still buy close 17 or 1800 Satoshis per dollar, I believe is the current rate. And it's important to continue to accumulate Bitcoin because the price really at this point at $1 trillion or $1.2 trillion market cap, it's got room to 10x from here to catch up to gold. And then I think it's also going to go after the global bond market because the bond market is really topped out. The interest rate's at 0%. And you've got the bond market in America hasn't been this high. If you look at how interest rates have traded, hasn't been this high in over 200 years. The bubble in bonds has been forming for 200 years. The bubble in the English bonds, the gilts, has been forming for 300 years. You haven't seen interest rates this low. That's the biggest bubble in the world by far. And when that bubble starts to collapse, that's 200 trillion in capital that's available now. And some of that is going to go into Bitcoin. So if gold, it catches up to gold at a 10 trillion market cap, and then you add this bond collapse component, now you've got a 20, 30, 40 trillion dollar market cap. So you still have 30x, 40x from here potentially. This is going to look cheap. I've been buying it since it's $1, and every single day for the last 10 years, people have told me it's too high. All the way going back, even Peter Schiff told me it was too high to buy when it was $1. And clearly he's been wrong.
Which is one attribute that gold has that Bitcoin doesn't?
The one attribute that gold has that Bitcoin doesn't at the moment is fungibility. Gold is fungible to an extent that Bitcoin is not. Fungibility meaning you can melt down your gold and recast it as in some other different form, and it maintains its integrity as gold, and it's completely anonymous, it's completely fungible. Bitcoin, because it is digital, because it's a public blockchain, because it's transparent, you don't have the same fungibility. And that's in fact why criminal use of Bitcoin has gone down. So it was estimated recently that criminal cases around the world, 1.5% is used Bitcoin. And that number in the last 6 to 9 months has gone down to under 1%, because actually using Bitcoin for crime is a terrible idea, because you can go right to the publicly accessible blockchain. It's completely transparent, and they track down the criminals. So the criminals are not using Bitcoin. They're using cash, or they might be using gold. It's much more fungible. Now, having said that, the fungibility issue with Bitcoin, with improvements that are coming, will be improved. These are things that are coming that will be improved. But I would say that is one aspect to gold that is superior in that respect, that one aspect.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with firsthand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members, where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.